Greetings all, Ben here from East West. Haven't looked at uranium in video format for a while, so I thought I'd just put this together to give you something to mull over. So we're just going to start here. I'm just on the bigger view with Cameco. Now, what I'm going to do here is I'm just going to run through how we would have thought about this from an Elliott wave sense, how we're trying to put it together, and why we've come to the conclusions that we have. So I'm just going to step out here to a weekly. Now, I'm just going to use the replay function. Okay, so as I kick this off, just coming here from the 2020 lows. And what we look for here is, you know, not doing the work so much here, but when you see this sort of thing, you think, straight away you think impulse, and then we've consolidated, and then we're going up. So you can see the consolidation that comes in here after this big rip. So what we're almost looking for is that retracement. We didn't quite get it here, but then we've kicked again. So at this point, as Elliotticians, we're thinking, oh, okay, well look, 1, 2, or AB. So what we'll be thinking about is one-to-one moves. We'll be thinking if this starts charging through here and starts extending, then you know, then we would be thinking, well, we can probably maybe start labeling this up. Maybe this is a one wave, this is a two wave. Okay, so there's that word maybe that everyone loves so much. But as we start extending through here, as the structure starts unfolding, we can see, okay, well, we're charging through here. Oh, look, we just come up here, we're through the 168, the 161.8 now. So at this point, you might be thinking, okay, well, maybe this is a 3. You wouldn't be expecting a deep sort of 4, but you'd be looking for a 4 and then kicking up for a 5. So, oh, and then we've got a big rip like that. So at this point, we'd be going, oh, okay, well, maybe that's a 4. This looks like it's still going. You know, what have we got going on here? But as this goes on, so at this point, an Elliottician might be thinking, oh, okay, well, look, that looks like 5 waves up. Okay, 1, 2, 3, 4, 5. That's what it looks like. If we've got 5 waves up here, you know, you'd be doing your sort of your stuff like this. Well, that doesn't channel very well, so that would make you think, oh, maybe that's not quite what we've got. We've got some divergence coming into the RSI. But we've got this 4 here that's a little bit funky, but we've got a flat 2. So maybe that goes. This is possibly problematic. But the point being is that once we'd seen something like that happen, it then becomes about anticipation. And what would we be anticipating? Well, at this point, it looks like we've got 3 waves down that it didn't quite make it to the 50. But at this point, we'd be thinking, oh, okay, well, maybe what we've actually got going on here, if I can just get this going up to a bigger degree, is what we've actually got here is a 1 wave, and then this has come back for a classic sharp 2. But now this charges through again. So at this point, we're thinking, oh, okay, well, and now it's coming back. So at this point, we'd be thinking, okay, well, if this is a 2. Now this, you know, would possibly now look like another. Turn the degree down again. This would look possibly like another 1, because this looks quite impulsive, and then another sharp 2 back into the retracement. So at this point, it's pretty reasonable, but that's what it looks like. And I think at this point, that's what we were kind of getting at. But the thing is, if this is going to be a 1-2, this has come down a bit deeper. If this is going to be a 1-2, well, we'd certainly, and considering that this is quite steep, we'd certainly be looking for a very steep wave like this to make 3 of the 3rd. We got a good start, but then the market's just sort of stopped doing anything. It's just drifting. It's not making new highs. It's not making new lows. It's not really doing anything. And the only thing that's happening through here is there's just bunches and bunches of memes floating about diamond hands and, you know, you're all stupid. But, you know, once the market started doing this, this is where it started becoming confounding. And at this point, once we sort of got a failure to launch here, you're starting to go back and looking at all this, and then you start to go back and look at the start of this. You think, oh, well, I was never really loved this as an impulse, but maybe. But what have we got here? I mean, what we've really got here is we've got a contracting pattern, really, that I can see, that is a sideways, a wedge going in. Okay, so that's not an impulse. So what is it? Well, it starts to look like a triangle. But if this is a triangle, well, I don't think the impulse can finish here, because I don't think you can go A, B, C, D, E. That would mean that's finished. So maybe, but I think just in the general context of the overall market, where I don't think the low's in, maybe that's right. Maybe that is how it goes together, which would mean that this is not part of an impulse. This would mean it's part of a three-wave. But what it means is that this is now likely to repeat from this point. So we would get 1, 2, and then this would kick. That's what that would mean if we were going to count it like that. I'm not counting it like that. Okay? And one of the reasons being is that I think you're better off finishing what looks to be an impulsive move like this. Okay? Why? Well, there's a few things that sort of make me think that this is more likely to be the impulse. That channel's better, I think. We've still got the divergence, but there's also problems through this section where a lot of people say, oh, it's too choppy. Actually, I've been attacked over this. It's too choppy. There's too much overlap. It's not an impulse. And that could be right. It could also be more a three-wave swing, more like an A-B. Well, I still don't know how you're going to put it together, but that maybe that is more correct. A, B, C, something like that, or it's an A, B, X, 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 A, 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 B, 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 X, 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 Y, 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 or some other rubbish that people go on with. I just keep it clean. For me, I just think that this looks very... I just think it's undeniable that this... Well, it's not undeniable. I think the best scenario, or the best case scenario, or the most high probability scenario is that this is a triangle. It just fits the pattern really well. And if it's a triangle, you've got to backtrack and make sense of it. Now, if we're looking at a perfect triangle, this is what you would want to see. You'd want to see a 1 wave, steep 2, big 3, flat 4, up for a 5, and then this before we kick on again. So, this is the problem, right? There's no way that you could say, oh, that looks like that. Well, maybe you could. I don't know. But, obviously this as an impulse is not perfect. But, I think it's just the best we've got to work with at the moment. So that is the way that I'm currently counting it. Until something tells me, until whatever this is resolves one way or the other, and maybe I'm wrong. You've got to change your ideas in Elliott Wave all the time, but you can just see today, this latest move has just come up and touched the 50. So that, if this was going to be correct, that's what I would be expecting is a three-wave move like that. Now, we can undershoot this trend line. We've talked about down towards $20 as support, just sort of coming into all this. And that, if this was going to play out like this is how I'd expect it to do it. If this is going to be a triangle, I would think that the chances of this really getting down low are limited. If this structure is going to hold, that's what I think will happen, and then we set to go on the next run. Okay, now how far does that run go? Well, if this is going to be a triangle, that has connotations for the larger count, and that brings me back to the large chart where I think what we're going to get is something more like this. Okay, rather than getting this, I think we're going to get this. Okay, and that's what the pattern's telling me. So I'm not saying we're going to come down like this. I don't think that's going to necessarily happen. Not that low for the reasons I've just said. I don't think it's gonna come down that low. But what I'm getting at is that this three-wave move is what I'm expecting in the longer term. And to me, it goes together quite well that we would come back up here and just test into this area. So, I think I've talked about the low to mid 40s before as being an area of interest. That's certainly how I would be looking at it at this stage without, the benefit of a crystal ball. But I just think it's because we're getting what looks to be a triangle here. That means that we're not, because when you're talking about impulses like that, which is more like what this is, you can't have a triangle in the wave 2 position. So the fact that that's becoming a triangle, at least in my eyes at this stage, means I think we're more likely to get that. So the good news is that I think this last leg down, if and when it comes, will be the leg that finally resolves this chop that we've been in since basically, well, we peaked here a year ago. So we've basically been going sideways in a contracting pattern for a year. So, I think that means light at the end of the tunnel. That's how I'm looking at it. That this is going to be, as it sits and as I can see, this next leg down is going to be, well, look, if it does that, it's pretty hard to say that's not a triangle. Yeah, you can go, but what about this? And that structure doesn't go. Well, you can kick holes in any structure, but it just looks like it's going together that way for me. Anyway, that's how I'm looking at Cameco on an Elliott wave sense. So just quickly putting that together with the making this impulse down here is this going back to Elliott wave, so I'm just going to leave that aside. The cycles were getting me a little bit because of this. I thought this was probably going to be a cycle low, but I sort of had my doubts because the length of time between here and here was not very long, and you can sort of see here that we've got really nice divergence off this low, which is not a fresh low, even though it looks like it didn't actually make the low there. So a divergent bottom, the cycle's finished here. It all goes together a bit better, but it still keeps us in line for the sort of 3-wave move. Whether this is going to be today, tomorrow, I don't know, but to come down somewhere and finish somewhere within this timing band. I don't know if it's going to be that long. It may not. It's just an average. It's just a guideline. But what I'm getting at is if we can count, I think this is 5 waves down, even though it's pretty shitty. But I think if we get another 5 waves down into this timing band and this starts to diverge, ideally I'd probably like to see this low broken. I think if we just come down and just break these lows, then that just sets it up really, really well as an ICL, probably a yearly cycle low. It just makes a really nice base. If we can just come down here, get below $21.04 in this time bracket in a 5-wave move to complete this 3, it just all goes together. That's what I would hope to see, because it'd make my life easier trying to analyse this. But that is kind of where we sit with Cameco. Energy fuels is a little bit different, because I think just the way that this count goes together, at least that this part, this triangle, that we've got an A, a triangle B, and then we come down to get a C wave here. So it's the same premise that I think we're going to get. Now, I've marked this 1, 2, 3, 4, 5, which to me is pretty awful. If given the choice as an Elliottician, I would much prefer to have the 3-wave down here, that we come up here for some sort of 4, and then we come down here for a 5 to finish. That would be much more appetizing to me. And maybe even this is the 1 and this is the 2, something like that. That sort of shape would sit way better for me than sort of how I've got it labelled. That's what I'd like to see, because that would then go together pretty well for this one as well, I think. It's a slightly different structure from Cameco, but at this stage I can only go off what I've got. So what I want to see and what I can see are two different things. So right now I just have to sort of take this as pretty awful looking 5 waves down with an extended 5th wave. Just dreadful. But until it actually does something like that, I've just got to stick with it. That's what I want, but that's what I can see. So I'll stick with what I can see for the moment. But then in terms of the cycle, well, again, this has been, I was betwixt and between about this, but now this looks like, and the RSI is just telling us that this is another long cycle that's finished, a back test, and now we're coming up. Now, my expectation of course, and this is kind of fits in more with the Elliott wave, my expectation is for this, that we get another cycle here that just sort of fails to just finish everything off. And so, you know, back to that Elliott idea, then maybe this is 1, 2, 3, we get a 4 wave, and then we just get 5 down here in a longer 5 in a cycle to finish off the whole thing. So light at the end of the tunnel. I think that's what the structures are telling us now. Like, there looks to be some pretty definitive sort of triangular action going in here. So things, to me, I think, are just getting close to coming to a head in the uranium space, which probably means that the general market is going to do the same. So I've been sticking with the idea that we're going to have one more big sell-off in the general stock market, and that, of course, would just fit quite nicely with my ideas on the structures of this price before, you know, the Fed changes. The Fed does officially change direction, start cutting rates, and what will happen then is, if history is any guide, as the rate cuts start, the stocks do keep falling, then they find their feet, the rates keep getting cut, and, you know, the big trend then turns around. The overall correction of the COVID rally is finished, and we go onwards and upwards. That's how I'm looking at it. I think uranium will play to that tune, but we wait and see. So I hope you got something out of that. Thanks for watching.